Welcome back. You're still tuned into Markets at Noon right here on ET Now, and turning out to be a good start for Indian equity markets this Monday afternoon. And Nifty is now heading towards that 26,000 mark yet again. But what is the fundamental setup looking like? To understand this, we now have Mr. Jyotivardhan Jaipuria, founder and MD at Valentis Advisors, now joining us. Mr. Jaipuria, afternoon, and thank you so much for taking your time out and joining us here today. First up, let's talk about the second quarter earnings season, which has just ended. And it was rather okay. There were no major negatives as such. 8% top line Nifty revenue growth is what we have seen. What do you make of the second quarter earnings, and what's your outlook when it comes to the second half of the year? Has it now improved basis the management commentary that we have heard?
Yeah, so like we started the second quarter expecting it to be a weakish sort of earnings, and I think it is in line to slightly better than what one thought. Uh, like you said, this is the sixth quarter we've had where earnings have been in single digit, and I think we are starting to see things bottom out. I would be expecting second half to be a double-digit earnings growth half, with probably around 10-12% sort of earnings growth coming at the Nifty level.
Right. Also, Mr. Jaipuria, talk to us about the earnings season. Do you think that, and as far as earnings are concerned, we have really bottomed out and we will start picking up, there is more in store in the second half?
Yeah, so second half, I think we'll have like a double-digit earnings growth, which we'll see. One thing which will play out is, as you know, the September quarter was hurt by the GST. There are a lot of purchases which got postponed to October because people were waiting for the GST cuts to come in right from the time the Prime Minister announced it on the Independence Day. So to that extent, you've already seen now that, October's behind us. We know that it's been a very strong season in October. All the pent-up purchases have come through. So that is going to play one important role in, driving earnings higher. Second is, I think the bank earnings will go up. Bank earnings were like negative in the first half of the fiscal year. But, as banks readjust to lower deposit rate also, we'll see NIMs expand, and so bank earning will do well.
Okay, so banks will do well. That's one sector that you're bullish on. But any other sector other than banks that you would probably look to enter into after the second quarter results?
So, it's been like a mixed bag. So for us, we are looking at some sectors which are not done well, which we think can do well in the future. So this includes, some companies in the pharma and the chemical space. There are some, capital good companies also, which are starting to look interesting because they've corrected quite a bit. And apart from that is the consumer, where focus is on the consumer discretionary side rather than the consumer staple side.
Right. Mr. Jaipuria, how should one look at this market? What should be one strategy? It is now about value versus growth because there are certain sectors who have seen considerable correction, whether it is the IT, but there are certain growth headwinds, right? So how should one place their bets? It's value versus growth. Where do you see more value in?
Yes, see, for us, it is, growth is important. And we want to buy growth at a reasonable price. So, for example, in IT, our worry is that over the next few years, the growth profile will be much lower than what we've seen in the past. So that's the reason, even after this stock price underperformance over the last 2 years, we've not really been becoming very excited about IT. At the same time, there are a lot of other sectors where you see considerable growth coming through over the next 2, 3 years. And that is what we really want to play. Like if you look at our portfolio also, we are expecting like our portfolio companies to deliver a 25% sort of earning growth. And our valuation in the portfolio is today 17 and a half PE. So that's what we try to build as a portfolio, that we want a portfolio where valuations are reasonable and earnings growth is high.
Okay, so that's as far as growth versus value is concerned, and you also share your thoughts on the IT sector. But as far as the market, next big market trigger is concerned, perhaps tariff uncertainty is now largely behind us. But which other factor you think will take Indian equity markets higher from this level? We are already at 26,000 on Nifty. Which will that big trigger be now?
Yeah, so if you look at it, like India's macro has been looking good for the last 1 year. The current account deficit, fiscal deficit, if you look at inflation, it's all looking good. So what has been missing is that the earnings have not been good. And second is, valuation, both historically and if you look at on a relative basis, has not been cheap. So I think one thing which is changing is that FPIs are sold a lot in the last 1 year. From the time market peaked in September last year, they sold over $30 billion. So that I think is one thing which will change. I don't think FPIs will be as big sellers over the next 1 year. And if we are lucky, they may probably like be buyers, because I think three things are happening. One is India is already the worst performing emerging market over the last 1 year. And there's been a big underperformance to MSCI. It's like over 20% underperformance. So to that extent, there's a lot of bad news built into the share prices already. Second is, if we see how the FPIs are positioned, India is a huge underweight for them, and they are like roughly 250 basis point underweight on India. So again, positioning and performance both are like in favor of a contrarian buy. Third is when we look at valuation, India not cheap. But now, India is trading more or less in line with historic premiums to MSCI. So like though India trades at 20 odd P, we trade at around 55% P premium to emerging markets. And this, used to be 100% like 15 months ago. So that P has shrunk quite a bit simply because India has not done anything, and the emerging markets, rest of the pack has done well, like China has done well, Taiwan has done well. So valuations are also no longer very, very adverse. So to that extent, I think, we'll probably start to see money from FPIs slow down. The selling will slow down, and at some point, hopefully, we'll start getting positive returns coming in.
Okay, so that's the word coming in with respect to what the outlook is for the market going forward. But thank you so much, Mr. Jaipuria, for joining us today and helping us understand what your outlook is on the market. But on that note, we need to slip into a very short break. More news and updates will continue on the other side.